Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of May 5th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was certainly another great week for Maryland mortgage rates. If you look at the bond chart on the screen, you can see those those green arrows up all week. That means the bond was rallying all week. The short-term trend is for the bond to keep rallying. You can see with that black arrow there. So as the bond rallied, the Maryland mortgage interest rates move lower. So we are going to recommend to continue floating your Maryland mortgage rate to start the week to see if the bond can continue the rally and follow the short-term trend of the bond moving up and rates moving down. Now, what has been helping the mortgage bonds? Let's dig into that. The first big report we saw last week was Friday. The April 2014 jobs report was released by the Labor Department, and that showed that 288,000 jobs were created for April. That was above the expected 210,000 jobs. And now also in that report, we saw the unemployment rate tick down to 6.3%, the lowest level seen September 2008. But all was not well in that report, and that's why the bond market was able to continue its rally. When you dig into the report, the labor force participation rate actually dropped back down to 62.8% at 35-year low. That measures the number of people 16 years and older eligible to work that are actually working in the workforce. So that shows that unemployment dropped not because people are going back to work, but because we lost over 800,000 people in the workforce that just dropped out, stopped looking for work. So not real good numbers when you dig into the jobs reports. We have to have a more meaningful jobs report. And those 288,000 jobs, the ones that were created were not professional jobs, which would help the economy. They were more service level jobs. And then in contrast to the jobs report, on Thursday we had the weekly initial jobless claims come out. That jumped another 14,000 claims up to 344,000 claims for a week, and that was above the 315,000 claims expected. So if we're creating jobs, we shouldn't have jobless claims increasing. So another report showing that the jobs report was not all rosy. And then we had the GDP release for the first quarter of 2014 came out very bad at 0.1%. That's a big drop from 2.6% on the gross domestic product reported at the end of 2013. And that goes to show that we're not creating professional jobs, because professional jobs would add to the GDP. The service sector jobs aren't really creating GDP. So that more support that the jobs report is not as good as it looked like on the surface. So we need that GDP to come up to have a meaningful recovery. Now the Federal Reserve also met on Wednesday and they released their policy statement. They're going to continue reducing their asset purchase program called QE3. They dropped it another $10 billion starting in May. They were purchasing $55 billion a month. And now they just dropped it to $45 billion a month starting in May. Their goal is to be done with that purchase program by the end of the year. And as they pull back from buying mortgage bonds, you will see mortgage rates to start to go up. So by the end of the year, people predicting rates to be in the 5% if the Feds continue to reduce and are at zero by the end of the year. So keep an eye out for that. So if you're looking to buy or refinance, now's the time to do it. Take advantage of this dip in rates. Get out there, get under contract, or refinance now. In housing, we saw the Case-Shiller 20-City Home Price Index released for February 2014. It showed a 12.9% year-over-year increase. Now, the index does show appreciation is slowing, and they're looking for only a 10% increase for 2014, but that still means homes are going to be worth more at the end of the year than they are now, so another good reason to get out and buy and capture some of that appreciation. Now, in the local news, the next free first-time homebuyer seminar is in Towson, Maryland on Saturday, May 24th from 10 a.m. to noon. Now, that's at the Baltimore Sheraton North Hotel. You can register for the event by giving us a call in the office at 410-412-3319 or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.